Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the Mini S&P 500 futures contract. We'll just take a look at the quick look at the daily market. This is actually the S&P cash. Take that back. This is the S&P futures that we're looking at, front month in nature. So it did kind of a circle there. Looking at a beautiful breakout day. Today is Wednesday, the 14th day of March. And looking at a beautiful breakout yesterday, we had the Fed announcement that they're not going to do anything with interest rates. But what was more important, and we'll look at an intraday chart in a second, was not only that, but the J.P. Morgan announced that they were going to buy back raise their dividend by back $12 billion, or sorry, maybe $15 billion, depending on how you look at it, 9, 12, 15, up to $15 billion in a stock buyback. That means essentially that Jamie Dimon saying, you know what, our stock is cheap. Let's go ahead and buy some back now. Now's the opportunity. And lo and behold, the market just blasted off, and we had so many long positions yesterday. It was really a banner day. I guess we should send Jamie Dimon a letter of thanks. Essentially, because it was really a banner day, and essentially, as we've mentioned oftentimes in this space, 20, maybe even arguably 10% of our profits come from just 10 to 20% of the trading days. And yesterday, we've kind of slogged through. You see this. It's good that we're looking at a chart of the daily market. Look at this extraordinarily narrow range. We can really make some good money on these wild swings, being short and long on these wild swings. But it's very difficult to make any really good money, any headway in either direction, be it losing money or gaining money, gaining profits on such narrow range days. We had a couple here, a couple here, a couple interesting days, and then recently we had last Friday was kind of an interesting day. Some movement, but as you can see, quickly blasting the upside. We have remained officially bullish since around 12:30 in the S&P 500 futures. 11:30, right around here, I don't know if you can see that, we went unofficial bullish. We saw this double bottom. We saw this retest of the prior lows, the breakdown lows. The world's falling apart. The U.S. government treasuries being downgraded, the credit rating of the U.S. government downgraded right here. I mean, it was just really, actually, that could have been around here, but it was just really a horrible situation. Nevertheless, we're pure technicians. We don't really care about the stock buybacks or the credit ratings or what have you. We just want to see what the market's doing. Obviously, that was a double bottom and a retest of the former low. So that was our unofficial. We couldn't really go bullish, but that was our unofficial buy signal. We couldn't officially go bullish until about 100 points higher. We did have that little bit of a swoon there couple weeks later, but essentially it's been a beautiful trade for our official market timing as we've been bullish again since about 12:30 in the market, and of course we're now at about 1400. Our first target was 1350 to go ahead and scale back some exposure. I believe it was 1340 to 1360, around 1350, and you see we kind of whipsawed around that level, around the 1350 level, actually trying to break down. But as you can see, our ultimate target was certainly much higher. Particularly as we go into the to spring, 1450 was our next target, I believe, 1440 to 1460 again, and we may even reach 1500. Of course, the Dow's at 13,000. Maybe reach 1500, but we're going to wait and see how the market plays around the 1440 level. Nevertheless, our second target is around 1440 to 1460, again, of course, in the S&P. So we've actually mentioned to our clients the market got only down to about 1340 here. But around 1320, we're definitely looking for some buy exposure. This is just a simple retest of his key intermediate term measure of trend following support resistance, now at 1327. We just really didn't get a deep enough retracement. And that's arguably bullish. Such a shallow retracement in concert, or just simply combined with a breakout session that we had yesterday on the Fed day, was just simply a bullish scenario. And probably added to the buying ends. Also, why you're not getting that much of a sell-off here today. You look at the range, there's almost no sell-off. They aren't really wanting to take profits, as this is, of course, a breakout bar. So that's a quick look at a chart of the daily. We can go ahead and switch over and look at the MRSEM, see how that's been doing. Beautiful trades there. Had a few losses back there, but if we scroll back in, beautiful long, right around 965. Or so, 967.30. beautiful long. We actually took our profits a little bit early in this system around seeing that very round 1,000 level. We took our profits this morning, actually, I believe at 998 or something. 997.90 was the high. Maybe it was 996 or 7. Went ahead and booked some of our gains. Nevertheless, so it's MRCM, how it's doing. The free system, based on the sentiment measures, we do see some complacency here. This is kind of interesting. We do this, our free system. Of course, you can trade this if you want full automation, just like all of our other methodologies. With full automation, no fee for you. Of course, it's not the most active model, but it's not all about activity. And you get this tested lower band. Now obviously it's a constrictive band, but we got this tested lower band that's suggesting complacency in the equity call ratio. A little bit of complacency there, but quickly back up above the midline, and again no real fall in price suggests that this market could actually go higher. Now this of course is a small caps. This is a mini Russell. We were just looking at the ES, and of course the Dow has been on a scream, on a tear. Excuse me, but excuse me. But this is small caps, and the small caps really have been, I'm not sure exactly what that means, but the small caps really have been underperforming. Now, of course, I think actually looking over the last 50 years or so, small caps are about 11% per annum versus large caps at about 8% per annum return in the stock market. But obviously, we're going into a new paradigm, globally speaking, with global, and we're lagging a little bit in some areas in terms of our country versus obviously India or China, particularly in math and sciences. So we could be going into a paradigm shift where, maybe our small caps, our innovators, our smaller companies that are just getting started, our startups, aren't going to be particularly as competitive. I'm not sure what exactly it means, but all we look at as technicians is the market, and certainly the small caps have been sluggish at best. Nevertheless, looking at the overall sentiment picture, this means the market could certainly go higher, and of course we are still bullish on the market. So we're going to go ahead and minimize that and see what we come up with. There's the let's go ahead and switch back quickly to we can come back to this in a second, to we'll say this maybe. There we go. So this is how we did yesterday. Again, it's been in fact our MBO, which is our Matte Black Original, has really just been, I'm talking about gaining $300 here this day, losing $800 that day, gaining $3,000 this day. At most, we've seen 3% swings on the venerable $100,000 portfolio. So it's really been just simply slogging through. But again, we just wait and bide our time and wait for these big days. And there you see a $22,517 gain yesterday for the MBO. There you are, Matte Black Original portfolio. This trades all of our best models at all times. $9,000 gain. Look at that, incredible! Just for the mini Russell yesterday, almost a $10,000 gain for the mini Russell. And $7,000 was for this. This is actually, so if you look here, these are combined. This is based on strategy runners trading, Matte Black, and then here is another console. Another account, MapDT, venerable MapDT, I think was up 450%, led the year last year, up 27% essentially. It's a $20,000 portfolio. $13,355 was the gain yesterday. Also, almost probably traded the same things that the Black traded, MBO. $9,300 gain, but of course, Matte Black taking advantage of more exposure. $7,000 in the ES, $4,000 in the mid cap, $2,500 in the Dow, almost $10,000 in the mini Russell. As we scroll down a little bit, so it's 26% gain, arguably 27% return. Delta DTS, the 10K version. We're always talking about the 15K version, but this trades 9 lots, day trades only, so it's $4,500, and margin is all you really need to trade the portfolio. Assume you're going to make money right off the bat. So obviously you need at least $10,000. You need $5,000 in $5,500 in cushion as it were. So that's an aggressive model, the 10K version, but it can be done. It can be simply traded with a $10,000 account. But we always tout the 15K, but it performed so well and then just lagged like the MAP DT that we certainly have to have a $10,000 version and offer a $10,000 version of the Delta DTS, gaining a whopping 59%. I guess we could look down here at it. There you have the Delta DTS. Evo EM active is the only system representative here. We would have to click on those two. This is just a snapshot of yesterday's closing count. 1,890 for the mini Russell, 2,175 it gained in the S&P. And again, this is of course a day trader, day trading portfolio only, and pretty impressive. Look at that huge move. There's Evo AM active going long early in the session, outriding this, holding on for that, and holding on for that. This wasn't even, I don't believe this was relative to the Fed announcement, but rather the JPM announcement on the stock buyback. So $6,000 on a $10,000 portfolio. Not exactly sure what it's done for the year to date. It's been very slow, but obviously making incredible money just in a single day. Is the Delta DTS, and the Matt Black up 23%. So very impressive. So how do we get to these numbers? Well, some of the swings are the EMDS was actually long yesterday. Look at that beautiful long that it just closed out here a few minutes ago. There's the equity curve of the $90,000, just $10,000 drawdown for the EMDS. MRSEM PTL still long. 88,000, just a $6,400 drawdown on this portfolio or this system, MRSEM PTL. Right there you can see just some beautiful winners, winner, very selective. EVR3 VSR catching a beautiful winner. There you see going long what appeared to be kind of a very sketchy trade early on. It got caught right at the upside and quickly came back down. Didn't look like the best of trades, but you never know what can happen on a Fed day. Held on and made incredible dollars. Went almost $1,000 a contract essentially, so it's about $2,000 for the EVR3 VSR. R30C did not trade. See if we can take a look at these. $86, just a $5,000 drawdown. $300 average trade net profit for the EVR3 VSR, putting up amazing. And the reason these models continue to put up gains, the reason that they made that we made 450% is we have new models that we launched probably 2 to 4, maybe even 5 or 6 or 7 last year in development. We had long development process, probably 4 to 6 months of new development, and as you can see, the reason these models still continue to outperform, and you see all these green dots, is after almost a decade of developing these models, you really have to learn to only develop models that are going to perform. It's the only reason that we're in business, that we make our clients money, is providing the highest quality, most robust trading systems. And there's just another example, EVR3 VSR. R30C hasn't really been trading. B caught a couple of trades. Again, a green dot for the R30B. R30A, I think, caught a couple of trades. Green dot again for the R30A. There you see a nice winner there. Missed out on a lot of it, unfortunately. Let's see what the B did. Look at the B. The B did a lot better with the R30. Very beautiful gain from about 1340 to about 1365. So very nice, 25 points for the in the S&P futures over just 3 days. 25 points, pretty nice. Not too bad at all. $1,500 per contract. So we're keeping going. Looking at the that was the B, caught the better trade, but overall, if you look at the summary, $5,000 maximum drawdown, $300 over the last decade, $300 average trade net profit, and $100,000 in profit. The B at less maximum drawdown, traded just one contract there, but can trade two. $4,000 is and $50,000 over the last decade, $300 every time it takes a trade. CBR right here, 91,000. Actually caught a beautiful long yesterday. Look at that. goes long. Another beautiful long. We had several models catch the long side yesterday, and again, it's kind of what we always wait for. EVMCM struggling a bit today. $161,000, $13,000 risk is what you're going to get there. But a beautiful trade for the EVMCM yesterday as it went long 6 contracts. There you see. We'll go ahead and do the trade list and see the 6 contracts yesterday. We're actually on into today. Yeah, we're on into today. We're only going to see so about $1,000 a contract. It looks so about $6,000 EVMCM made yesterday. So beautiful, beautiful trading for the EVMCM. So that's really how, and of course all of our venerable models that we've had for years and years. But these are mixed in with particularly the MBO, the Matte Black Original. Some of them are the Delta DTS. Actually, these are our Platinum models. These are really just in the MBO. These are our Platinum models, now that I think about it. So you probably didn't even see those represented in the Delta DTS or the MAP DT. So it's very interesting. We're just looking at some amazing trades that you're not even seeing in the aforementioned portfolios. The Delta DTS, beautiful trade from our 2K day trader 60, short today, not too bad. The grind, as usual, beautiful trade again. Winner. Chicken dinner was on this trade right here. Swing System 5.0. Check out this long in the EMD. Unbelievable. Still long from 965 up to 990. The YM, that is the leader. This system, believe it or not, look at that long. This system, believe it or not, is in large part due to probably one of the leading systems. It's most of our stuff's not really tracked on Strategy Runner. We put some systems there about 5 or 6 years ago, and this one is by far leading. Look at that, 12,700 to 13,100, 400 points quickly in the YM for the Swing System 5.0. But so we're going to keep on going, keep on chugging. So there's the Evo. Let's see how the EMD System 1.0 is doing. That was short, unfortunately, so that took away from some of our gains. The Aussie, kind of mixed. Evo YM, nothing. Evo EM, nothing. The Evo, beautiful winner yesterday. Caught in a loser today, though. We took some losses on the Evo EMCM we saw yesterday, but when you're making $6,000 on the day prior, it's pretty impressive stuff. So we are really running out of time. I think that's the last thing we want to look at. Oh, let's take a quick look at the daily market for this day. As you can see, it's full all-out bearish, kind of a choppy day. We had that continuation move higher. Again, it's a very small pullback, but the intraday dynamics overwhelmingly bearish, suggesting a free informational day trade. Short 1387 here as we retest the underside of the trend. Go ahead and target 1380. Doubt we're going to get there. Probably 2-3 star out of 5. Probably going to be a choppy session, so not really much on the intraday. But have a special of interest, and if you go to the website, you can select either of those portfolios. The MAP DT, I believe, is closed, so you can go to the MSA UDT. The MSA UDT was actually an underperformer. Only gained 25%. Not really an underperformer, but we just chose those three. The Delta DTS. There you go, Delta DTS. You can also, of course, do the Platinum Reserve PR100, of which we looked at a few of those systems. As a matter of fact, most of the systems we looked at were Platinums. All the returns that you saw right here were things like the Evo EM Active, which we didn't even look at, but a lot of models that actually weren't represented in the Platinum models that you just saw. So it's just overwhelming. You can do the EVR3 portfolio, 50K, MB250, or 100. PR100, but if you do the Delta DTS or MSA UDT and add to cart, it's just $788 for 3 months. Unbelievable. Oh, you can do the MAP DT version 5.0. Yeah, there you go. As a matter of fact, that's what that version is. So the MAP DT that we just quoted you is closed, but the MAP DT version 5.0 is open, and there you go. There's some of the models that you get A couple of grinds, 1.0. That's unbelievable. When is that? So you can definitely participate in that if you'd like. But nevertheless, going back to our cart, we'll just hit add to cart. If you purchase 2 quarters, so just 6 months, you can actually save 30%. I believe that by entering promo code video. Oh, it's going to say you have to have more, so you do 2 quarters and you go ahead and recalculate, and that should save you 30%. I'm not sure why it wouldn't be. That should definitely be saving you 30%. There we go. The Delta DTS, which you just saw make $6,000 yesterday, is nicely up on the year. It was up 400% last year. 6 months for $1,000. You just can't beat it. You just simply cannot beat it. If you guys have any questions, go to the website, chat with support team live, or shoot us an email to admin@MiniAnalyst.com. Hope you've enjoyed the video, and we will see you next time.